Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look again at the euro currency. Well, as Mr. Bilbo said in the Lord of the Rings, changing comes slowly if it comes at all. So that has relation to the euro currency. So you can see that situation is really changing very slowly. In fact, the 3 weeks in a row market stands in very tight range. As we said earlier, the long candle holds the overall price action after that in this range. Market is accommodating to this current area and building an energy for breakout. At the same time, the fact that market stands tight and for long period is also an advantage, because here we could understand and could see the nature of this action, the nature of the price action here. We have crossing candles when the next candle is moving deeply inside of the previous candle, so we can see this move up, new top, returning right back down, inside of it, return back up, again move up. Here is deep retracement, long shadows, a lot of indecision candles when the market just shows some range and close right at the open. Here and here you could see. So by the action here we could understand that this is not an impulse move and that is not the starting of any trend. That is the retracement, guys. And as market stands in this retracement after long move down, we could get sooner or later downward continuation. And that is the core of our trading plan, although we hope that market will not be able to pass through this support just immediately, just in a moment. Because that is a yearly pivot point, that's the monthly pivot support one. And that's also 3/8 fib support on the weekly chart. Market following the probability, market should respect this area by some bounce. This bounce really could be significant. Also, if you take a look at this recent action with the whole month since the beginning of the June, when this non-farm payrolls candle had been formed, you could see that trend has shifted bullish here, but price action doesn't support this. As you can see, market even forms this top, then that top stands even lower than this one. So that could be the indication, the sign of the bearish dynamic pressure. The bearish dynamic pressure suggests the taking out of these lows. How deep this taking out will be, it's difficult to say, because the nearest target that we count on stands at 127 extension, approximately 134.55 area. But guys, here we also have the 1618 extension. I do not have this chart on this chart, but it stands approximately at 133.80 area, 133.80, 133.90. It's right here. And why I'm speaking about this target as well, because this area is also the target of the double top pattern. Double top pattern on the daily chart. Recall this pattern. Double top. First top, second top. The target of this, as we have discussed previously a couple of weeks ago, stands precisely at 133.90, 133.80 area. It's right here. That will be the target of this double top pattern. That's why, although the 127 target of this butterfly seems logical, because here is great support, and following the logic, market should not penetrate the support too deep. But at the same time, I will not be surprised if market will move more 50-60 pips to the downside and hit the target of the double top pattern on the daily euro. So that's also possible, but that will be our minimum target. We will be focused on this area. So on the daily chart, if we finally comes to the culmination, to the final moment, and following to our strategy, following to our thoughts, we should get some reversal somewhere inside of this area, to the downside. We should see the starting of the right wing of this butterfly. At the same time, guys, I would like to show the Swiss franc chart. Recall that we also take a look at the daily Swiss franc, and we said that as grabbers have been formed, market should take out of these lows, and you can see that this has happened. So market also has achieved the minor target. These lows, market has taken out of these lows and completed the target of these grabbers. As you can see, that is what we have talked about on the previous week. We said, although euro and Swiss franc are related currencies and they show the same direction, but absolutely it's not necessary that they show the equal distances. So direction really was the same. So here to the upside and the Swiss franc to the downside. Okay, but the Swiss franc was a bit more fast, so a bit faster to the downside, and it has completed the target, while euro currency stands below this top. That is also, we have mentioned it, and that really has happened. Now let's shift to the follow time frame chart of the euro currency. Here, guys, the picture looks very similar to the previous week. Our discussion on the previous week has started from this point, and we said that market should continue move higher to the 1618 target, because this acceleration was really fast, and this acceleration has significant impulse and momentum, and market should follow to the 1618, and that really has happened. So market has passed not small move, although it was really choppy, but right from this area to this one is approximately 100 pips to the upside. It's not small action, but now we stand much closer to the target. Okay, and it will be perfect if we would see some reversal pattern that could trigger the starting of the right wing on the daily chart. So the 1618 target is only the half of the task. The second half is to get some reversal pattern. And here I suspect we could get some different patterns, but all of them have the shape of the butterfly. The first butterfly, minor butterfly, stands right here. This 127 extension stands precisely at the same area as the 1618 extension of the ABCD pattern. Of these ABCD patterns, 1618, 136.55. It stands approximately 136.60. It's very close. Also, guys, we could get this bigger butterfly if we will take this A point not from here but from here. In this case, the target will be at 136.72 approximately. It's right here. It's very close to the weekly pivot resistance one of the common week. Take a look at that. Weekly pivot resistance one stands just 1 pips lower than this invalidation point, and this invalidation point is the crucial top of the butterfly on the daily chart. If market will move above it, the butterfly will be vanished on the daily chart, and we will have to start to search for another setup. But until it holds, the butterfly is valid on the daily chart, and we will continue to watch over it. So, and finally, the third chance on the hourly chart is another butterfly. It's even bigger than this second butterfly. If market will start move to the downside here, will show some retracement in the beginning of the week. In this case, current action could become the just left wing, while here market could start to form the right wing. At the same time, the target of this butterfly, the greater butterfly, will be the same, because the initial swing of this butterfly will be the same as the second butterfly. Okay, what does it mean for us? In general, just shortly speaking, that market should show some reversal if our suggestion about the daily pattern, daily reversal butterfly, is still valid and we are right. In this case, market should show some reversal in an area between 136.55, 136.75 area. In this range, market should complete some reversal pattern and start move down. That's what we will be watching for in the beginning of the week. And later we will decide what to do. If it will really happen, we will try to take the short position with the hope to ride on it about 150 pips. If we will be wrong and market will continue move to the upside, well, in this case, consider guys that we could place very tight stops, or if we suggest that even we'll take the short position approximately around 136.60. Our invalidation point is 136.76. So approximately 25-30 pips risk. It's really very small, but the potential is very significant. That's why I think that current setup is very interesting and it's really valid, and it's worth of our attention. So let's see what market will give us in the beginning of the week.